Hey everyone, it's Vishal here from Live Wire Markets, and today I'm joined by Henry Jennings, Senior Market Analyst at Marcus Today, to discuss the third week of reporting season, some of the highlights from the companies that have announced results. Henry, really appreciate your time. Thank you so much for joining me.
My pleasure. Great to be here.
Fantastic. Henry, let's get straight into it. I want to kick off with CSL because I feel this one is the story of the week. Its shares are up 70% from their lows. You had called it no longer blue chip, but you did that at a higher price, and it's got no CEO. It reported a loss. It didn't grow its dividend for the second consecutive year. Now, at
Yeah.
the same time, something's really interesting is happening. We've got a rotation into global biotech. If you look at the Spider Biotech ETF in the US, it's hit a record high. Is this a CSL was just extremely undervalued story, or is this a global sentiment story that CSL is simply riding?
I think actually it's probably Vishal. It's a bit of both, to be honest. Obviously, global healthcare stocks generally have improved, and we've seen some stunning rises, and like some Moderna this week as well. But I think CSL just got to the point where it was just too damn cheap, to be honest. When it was 1995 bucks, this really was pricing in the worst case scenario by a long shot, and certainly there were some shorts there. The stock's up 70% since those lows. And I find it incredible, really, that we're seeing a company the size of CSL, rallying 20% really in a day on the results. And the results weren't particularly fantastic, but they are looking backwards, and the market is now looking forwards in terms of the ship steadying and the various parts of the business steadying. They've still got problems with Vifor, I think, and my thesis that they paid way too much for Vifor has obviously been borne out by some of the extensive write-downs they've made on that business, as the competition in that iron deficiency space continues to be quite extreme. But the rest of the business is not doing too badly at all, and it just got too cheap. And I think some of the shorts have been made to pay this week. But at some stage, the momentum will run out, and we'll see, I guess, it sort of steady and maybe consolidate the move, because it is an extraordinary move by any stretch of the imagination, but it just got too cheap. In fact, I wrote in the newsletter some time ago when it was sort of 95 bucks that I did see a bounce in store. My price target on the bounce was 110, sort of a 10-15% bounce, and it has gone way beyond that. So as we've seen with lots of these stocks in the market at the moment, momentum really does drive things way beyond where you think they're going to be driven to.
As they say, the famous saying, the market overshoots on the upside, undershoots on the
Yeah,
downside, but it's
very
not
much
back to the
so.
blue chip by any means yet, in your eyes.
Well, I think, it was always a blue chip. The problem was that it had stuffed up, paid too much for Vifor, lost its way. Clearly, new management is being brought in. We still don't have a permanent CEO, but Gordon Naylor has been doing a good job, and it has stabilized the business. And that is really the key, I guess. Brokers have always been very fundamentally bullish on CSL, as it is, one of those stocks that everyone seems to love, a great Australian success story, etc. So it's kind of an easy bounce in some respects when things do bounce, but maybe it has just gone a little bit too far in the short term. And certainly, if you bought it in those low 90s, you've done extraordinarily well. And if you've held on to it, so maybe now is the time to take at least some profits off the table, because it could go sideways from here for a little while as it consolidates.
Okay, very cool. Let's move on to BHP, which is another highlight. My colleague Anna Dadic did a cracking interview with the CFO, and I guess the story here is copper. What's interesting to me now is the divergence between BHP and Rio. If you look at their year-to-date performance, BHP up 42%, Rio up 17%. Do you expect a copper premium to stick to BHP, or is it time for a switch where Rio is potentially looking better value here?
I think the copper premium in BHP is going to continue. It really has pivoted quite well, and it's a simple business. Rio is probably a little bit more complicated in some respects, and also its corporate track record in one or two environmental issues is obviously holding it back. Not that BHP is any saint in that respect in some regards, but it has done very well. Those numbers were pretty good, to say the least. And what I liked about not this set of results, but the silver deal they did with that silver royalty stream. They plucked, I think it was 4.3 billion US dollars kind of out the back of the sofa, and it gives you an idea of the flexibility. There's also, of course, a new CEO at BHP, who has been around a long time. And so it's not like he's a new entity. And it does seem to be a particularly nice, easy handover in the great BHP relay from Paul Henry. So I don't mind BHP. I think it probably deserves that premium over Rio.
Okay, let's move on to Zip, which was another highlight. I have to say, I look at lots of earnings results. I'm sure you do too. There were a lot of green numbers with the up symbol in this one. Now, I worry though. Zip, buy now, pay later. If your loan growth is going ballistic and your revenues are going ballistic, isn't it a sign that the American consumer is not doing so well? Because we also did see a concurrent uptick in provisions. What do people make of this company now?
Well, I think the result was pretty good, to be honest, and it was very good in respect to keeping those bad debts under control, because that was part of the reason it had that cataclysmic drop one or two reports ago. So that is very important. I think, the US consumer definitely is slowing down, and we saw that with some retail sales number. But Zip is, I wouldn't say pivoting, but US consumers are using it more for everyday things like groceries and paying the bills, and not just buying, dresses and suits and shoes, etc. So, I think that's important, that they're becoming an integral part of the budgeting for many US households, which I guess shows the strains on some of the US households, but it also shows the opportunity for Zip. And I think, the buy now, pay later thing still remains very much, I wouldn't say in its infancy in the US, but it's not probably as pronounced as it is elsewhere, although there is, many companies competing. But certainly Zip is showing some pretty impressive numbers. And as you say, all those arrows pointing up is always a good thing. And there has been some short positions in this one, and many people have been doubters. I've held this one in our small cap portfolio for a long time, and we've done relatively well out of it at times, and very well out of it other times, and not so well out of it at other times. But I think at the end of the day, the US consumer, we've got that K-shaped kind of economy in the US, and those on the lower arc of the K are those that are struggling a little more, but they are using buy now, pay later in their budgeting for more, mundane household items, like actually paying the bills and buying groceries. So that's good for Zip. It's not necessarily good for the US economy, but it is good for Zip, and they are making the most of it. And I think, the CEO is doing a pretty good job at the moment. So I'm expecting this one to go higher.
Okay, all right. Let's switch to gold. Evolution Mining. What
Yeah.
a cracking company this is. Record earnings, record cash flow, record dividend. Just casually moved into a net cash position as well. Stock is up around 15% this week. Can the golden run continue?
Well, I guess, we've just seen the US debt pile go through $40 trillion, and Scott Bessent fire, I wouldn't say a bazooka, but he certainly Operation Twist. Well, that hasn't worked out particularly well. And in the big scheme of things, it's not particularly effective. And we did see that reverse last night. And gold has been the beneficiary. And Evolution, it's a quality run company. Let's face it, the management is fantastic. And as you say, record profits, margins, cash flow, higher returns to shareholders, all in sustaining costs of 17.95 to 19.95 dollars an ounce, where the gold price is significantly higher than that. So assuming the gold price continues in the same vein, Evolution is going to do well. The other great thing about Evolution, of course, is it has got a lot of exposure to copper, 63,000 to 70,000 tons of copper in terms of production for FY27 guidance. So that is significant. It is one of the great copper plays, I guess, on the ASX, combined with gold, two metals that are doing very well. And if the US, with that 40 trillion, combines to print money, and people lose somewhat faith in the Fed and the Treasury, and the bond vigilantes come back, then it is possible we could see gold heading higher still, 4,500 at the moment, and it could head higher, in which case Evolution will do well. So I continue to like Evolution. It's been a great success under Jake Klein. Of course, he stepped back somewhat, but still very much in the Jake Klein mold. And I like this because of the copper exposure as well.
It's all in the name, right? We perceive it as a gold player, but it's actually becoming a major, copper is becoming a major contributor to
Yeah,
profitability as well. So important for that to investors to know.
yeah,
Let's talk about Judo.
yeah,
I'm going to be honest with you, I don't know too much about this company. When I first heard about it, the stock was closer to $2. Now it's
yeah,
closer to one. I love
yeah.
reading financials and bank balance sheets. Capital ratios look good. Earnings look good. It's affirmed its profit before tax forecast. What's going on with this company? Why is it getting punished?
Well, they got punished a little while ago, Vishal, mainly because it had some issues with a couple of borrowers, three or four big borrowers that were in some sorts of bad debt situation. So that really did weigh on it, and I think the market was somewhat surprised about the concentration of risks. These guys lend to businesses. Their net interest margin is probably double where the traditional high street banks are. And to some extent, the big banks have abrogated their responsibility to business lending and to a different sort of sector of the market, far riskier in some respects to people like Judo. And Judo has done very well on the back of that, but the market was very surprised about that concentration of risk to those three borrowers. Very unforgiving, this market, as you know. So the result was kind of as expected to some extent. But what was interesting was the far greater transparency in the result as opposed to their exposure to the various different sectors. So that was good. And the market likes transparency. We like to see what we're getting and we like to know what the risks are. And clearly there are still risks there in terms of credit quality. And the company obviously wants to grow, but there is this balancing act between credit quality, bad debts, and growth expectations. Now, Judo has kind of reset now around that dollar level, and I think, hopefully, it will continue to stabilize and push back up towards $1.20, $1.40 in time as the market gets more comfortable with the risk level involved here, and the net interest margin, which, as I say, is pretty much double what the big four banks are showing.
Okay. Let's talk about Temple and Webster. It's one of the lowlights for the week, with the stocks tanking 17% after the results. So my colleague Kerry Sun filled me in on this one. It guided to 50 to 80% EBITDA growth in FY27, but their trading update for the first 7 weeks showed a 13% decline. Can you help investors understand what's happening with this growth, darling?
Well, I guess, we are in an economy which is slowing down. We've got a housing market that's slowing down. Temple and Webster, to some extent, are slowing down as well in that respect. And, I looked at this company some time ago, when it was a $3 or $4 billion company, and I was scratching my head trying to work out why the market was giving it such a huge valuation. And on a technical basis, it looked like it was going up forever. But when you looked at the market cap compared to the actual profit and the money it was generating, there was a big difference. And we have seen this stock collapse. And something that I did point out to, because it did look massively expensive compared to something like Harvey Norman or even JB Hi-Fi with the Good Guys, etc., and other stores in the sort of the consumer discretionary category. So, to be honest, it's not really been one of my favorites. And as I say, I did put a bit of a sell on it when it was much, much higher up, and it has followed that path. And I guess we all know the economic headwinds that are facing consumers at the moment and the housing slowdown. And people typically, when you buy a new house or you move, you put your stuff on Marketplace, you can't give it away, and you try and upgrade your furniture and your lifestyle to go along with your new home. And if there's not so much activity, I think that does weigh on Temple and Webster. And so it's certainly one that I'm keeping an eye on, but there's no reason really to be there at the moment, I have to say.
Okay, fair point. And former growth darling, if you will, I stand corrected. Its share price was much higher. Now,
Yeah.
those are the companies I wanted to discuss. Henry, any other highlights for you?
I guess, Vishal, what's astounded me again, we should be used to this by now, but is the extreme volatility that we've seen in the market. It continues, and you kind of expect that in small and mid caps where you don't have a lot of analyst coverage and maybe liquidity is a bit of an issue. But we have seen, volatility to the max in large companies. I mean, we've seen it with even the likes of Cochlear. We've seen it with CSL. We're seeing it, across the board, and in a lot of companies, and a lot of shorts are being punished in this market at the moment. So interesting to see how things are playing out. We've got another week to go, of course, a week and a bit really of results, but we have seen extraordinary volatility, and that is going to continue, which does keep investors on their toes. Some of that volatility is reversed the following day, and we have seen, even for the likes of Zip, which I think was up 18% yesterday, is down 8% today. So some of those big gains on reflection do unwind, but many do kick on, and you get into the upgrade cycle, and that does tend to last for a quarter. So it is kind of amazing that we have this volatility, especially in these big stocks. It's not going away, Vishal. We just have to get used to it and strap in and hold tight for a fast ride, as they say.
Henry, who said the market was efficient, eh?
The market is very inefficient. It's in theory, it's efficient in the long term, but certainly in the short term, it's very inefficient. And we have gamified the market, and with all games, yeah, there's winners and losers.
Absolutely. Yep. We're seeing some absolutely crazy move with the confluence of quants, hedge funds,
Yeah,
passive trading. Henry, thank you so much for your time. I really appreciate it.
my pleasure. Thanks for having me, Vishal.
No worries. I hope you enjoyed this video, and to our investors battling in the thick of reporting season, deciding what to buy and sell, I hope this information was useful to you. Please remember to like this video and subscribe to our channel. Good luck with the rest of the reporting season.